Hello, ladies and gentlemen. Welcome to yet another video. Hope everyone is doing well. In this particular video, I will be discussing one stock that I call a forever stock. It's a stock that I keep buying every time there's a dip happening, which is quite often. And this is the beauty of the stock market. I don't panic. People get emotional, they get hysterical when they see the prices going down. But this is the opportunity to buy, stocks on a discount every time this change happens. So this particular stock is a forever stock. It's been online for such a long time. A movie was made about it. These are just a few clues that I'm giving. And of course, we all using it one way or the other, whether it's for business or for personal use. Now, before I go and dive into the stock, let's talk about the stock market over the last 24 hours. We can see that Apple was up, Google was up yet again. So very healthy improvements across both. And I do have stocks in both. I love Apple, and Google is a search engine I use, and I'll continue using probably till my last days. In terms of the other sectors, health and technology, finance, all of them were a mixed bag of results. Some of them were up, some of them were down. But over the next few weeks, I'll continue providing you with some solid stocks and recommendations. So please do me a massive favor. Takes 1 second. Please like or subscribe to my channel and follow the stocks that I purchased, because in the last 2 years I made over 270% return on investment as a result of my very strict rules and the type of stocks that I buy. I do not chase hype. I don't go after FOMO. I use my own due diligence and very strict guidelines to ensure that I have some safety net and that I have the highest probability of success. Obviously, nobody can assure you that. And by the way, I'm not a financial advisor or planner. You have to perform your own due diligence. So this is why ongoing education is important, but I can provide all the right tools and recommendations. So let's talk about the stock. And this particular stock is Meta. There we go. So the reason why I like Meta so much, let's go into these screenshots now. This is a screenshot from TipRanks. You can see it's a strong buy. A lot of the analysts have placed a buy order on it, and they're expecting the stock to go up to $872.30, which is a 18.35% upside. I will give you my prediction on the 12-month forecast, and this is the price that I'm aiming for, but just keep this particular price in mind. Now, with this being said, let's talk about the reasons why this particular stock is set to continue to grow, and we'll talk about everything. This is Seeking Alpha. I use it very heavily to form opinions in terms of valuation of the stock, whether it's undervalued, overvalued, how it's comparing with the rest of the market, and what the analysts are saying about this particular stock, or any stock for that matter. So first things first, I'll look at the trailing PE ratio. We can see that the trailing PE ratio is 26.73, which is not too bad. This could be better. However, the forward PE is 26.32, which is lower than the trailing. And this is a very big plus for me. I always like to see this being lower than the trailing. Also, one of the other items that I look at to make sure that the stock is at a discount, this number right here needs to be below a 1. This gives me a lot more confidence when I see the PEG ratio, the trailing PEG ratio being lower than 1. It means the stock has dipped, and very likely the stock is currently operating at a discount. It has a lot of room to grow, basically. The other items I look at is this one here. The Seeking Alpha analysts have given this a consensus of a buy signal, and the Wall Street have given this a consensus of strong buy. Again, more reiterations that this is a very good stock that's poised to continue to grow in value and these numbers to go up. Let's talk about the ratings now. I tend to like to look at the Wall Street analyst rating, And going down here, you can see that the upside is poised to go, by 14.84%. So the analysts are forecasting this particular stock to increase up to $863.20, which is not too shabby at all. So everything's pointing in the right direction in terms of the grades, growth. I always like to see the growth being a minimum of, no less than a C. It's a B minus. Profitability is A plus. This is solid. I love seeing this. Profit means momentum. Momentum means growth. and of course more money in our pockets when we decide to sell the stock in the future. Let's talk about the other screen right now, which is one of my favorite tools. And guys, I recommend you to definitely at least have a look at this particular tool, Stock Unlock. It saves me hours of research. I hate looking at graphs, bar charts, all sorts of charts. Anything, the only pie chart I like to look at is the one that I actually basically love to eat, pie charts. So let's have a look at the analyst rating. The analyst rating for this particular stock is $866, which is an upside of 15.7%. And then in terms of insights, this is the important part that I look at: growth. Is the revenue increasing or not? And we can see that the revenue is definitely increasing, and it's poised to increase. So this is a good verdict, which is important. The other items that I look at: operating cash flow increasing and free cash flow increasing. The operating cash flow is very good. However, the free cash flow increasing has been marked as an average, very likely because Meta is spending a ton of cash on research and development, on AI, and all these other crazy stuff that it's coming up with and shocking us with, new technology and new addictions. The other item I look at is this one here: net income increasing. This is very important, and it's very good. The score is very good, and I like to see everything being green, which most of them are. One of the other items I look at is this one here: return on invested capital. This is also a very good score. And again, return on invested capital, for those that are new to this channel, is also known as return on capital. This is one of the most important metrics investors take a look at when they're analyzing a company and its ability to generate returns for shareholders, stakeholders, or shareholders. ROIC shows investors how much profits the company's invested capital generates. It essentially shows them if the company is investing money wisely and getting solid returns from it. So again, very important point here. And this is something that, for some reason, a lot of the other YouTubers, I do not see them mentioning ROIC. This is something I like to look at. The score for this particular stock, according to Stock Unlock, is 4 out of 5, 4.03 out of 5. And what it tells us here is that, as a summary, Meta Platforms has grown revenue at 19.38% over the past year, which is a strong growth. Keywords right here. Also, it has more cash than current liabilities. We'll talk about that shortly, meaning it has enough cash to handle all its debts within the next year if it wanted to. So it's a cash heavy machine. This Meta keeps printing cash, as we say. All right, let's talk about the last screen, which is one of the most important ones as well. This is a screen grab for TradingView, one of my other favorite tools, which is tradingview.com. And what I've done is I just did a quick screen grab so you can see the items that I look at and avoid all the other noise that's currently out in the background. So let me just remove this here. What I tend to look at is this one here: total assets. The total assets need to be higher than total liabilities plus total debt. What we can see is that if I was to add the total liabilities, which is about, let's say, 100 billion, plus the total debt, which is 50 billion, it'll be around 150 billion. So the total assets is definitely a lot higher than 150 billion. And this again points to the fact that Meta has got a ton of cash. It can destroy all its liabilities and then some, and pay each and every one of us a very nice, chunk change, as I say. Now, the final item I'd like to talk about is my price target. I like to keep the videos under 10 minutes so you guys don't get bored. My price target for this particular stock, we've had a look at TipRanks. We've had a look at, let me just go up here and share with you. TipRanks, go here. Now, TipRanks is given a strong buy and a prediction that the price will go up to $872.30. We've talked about Seeking Alpha. The price prediction is $863.20. And then we've got Stock Unlock. It's given a prediction of $866, which is a 15.7% upside. My prediction for the stock and what I'm aiming for is $870. So please, guys, keep this in mind. Just write it down somewhere. And it's important for us to know that this is not the absolute figure. Every time the stock keeps going up, let's say right now the stock is, let's have a look. The stock is $750. if it goes up to $810, you have to revise what the figure is recommended in TipRanks. If it's going higher or lower, and you have to adjust your forecast, what you are personally happy with. So again, there's no right and wrong in this game when your stocks are moving up. It's what you're comfortable with and how strong a stomach you have. I personally don't have a lot of emotions, so I like to basically just ride it for the long term. This is a forever stock. I will keep buying and keep buying and keep buying and never sell unless I absolutely need the money. So guys, this has been the video for me. Please let me know if you have any questions or feedback. I'd love to hear them. And please don't forget to like and subscribe. This is a brand new channel. I'm always looking for ways to improve, whether it's recording or whether it's explaining things in a better way. So leave me your feedback and let's make some money together. Thank you. Happy investing.